Real quick, guys, just want to give you a quick video here. It's like the shot heard around the world yesterday, and today's video is going to be all about the overall theme of the week, which is slowing growth, which is being teased out from the taper talks that were released yesterday in the FOMC minutes. Now, generally what we're seeing here is the response to that. This is the DXY here on the screen, and we're seeing some strength here from the DXY. And if we compare it to the S&P 500 with this ETF here, the SPX, we're seeing some weakness. Now, the S&P 500 is a discounting measure of economic performance. And unfortunately, a lot of analysts are seeing the slowing of, or the lagging that's going to be happening next year when it comes to the taper talks, potential for rising interest rates, potential for rising taxes, and lower than consensus earnings that will be experienced by companies in the US. And we're discounting that now in the present. So that's why you're seeing the S&P 500 dropping. And with that, you're seeing the dollar rise in response. And this idea of slowing growth is also impacting commodities as well. So you're seeing here we have copper futures dropping dramatically. There's a gap down there on this most recent day. And again, copper is a good commodity window into what's happening into China. China's struggling, obviously. And after yesterday's announcement of the taper talks, here we have the emerging markets also struggling. So you see here, there's a gap down as well from emerging markets. So this is exactly what the IMF did not want. And we didn't even talk about, raising rates. We just talked about potentially tapering here, and emerging markets are struggling because of it. So with that, the overall view, the overall story here is that silver, which is very much tied to industry now, will likely experience some near-term weakness in the face of a stronger dollar and weaker prospects of economic growth. Gold is kind of in between here. Gold, yes, is a safe haven, but still there's more of a bid for the dollar right now, as there's a continued view of strength in the future for the US dollar. And because of that, it'll give some weakness and some downward pressure onto gold, even though we're in a risk-off environment. So it'll benefit from this risk-off environment, but then now we'll have to compete against the US 10-year Treasury yield and the DXY. But overall, we are in risk-off territory, guys, and growth is looking like it's slowing. So let me know what you think about this in the comment section below.